This video is about the adjustment process by David Cruz. Hello, my name is David Cruz, and today we will be examining the accounting offset, the adjustments needed, and some mitigation steps for Parsi Ominous. There seems to be some major consumption differences between the expected amount of polyurethane foam being used on the refrigerator line and the actual use on that line. An excess consumption of $350,000 valuation has been realized, and so we have to make adjustments to future forecasts and the financial records as well. What normally happens when manufacturing supplies are being purchased is that you take your beginning inventory, which you counted up, any purchases, which are increases to the inventory, are added to that amount, then you subtract out any cost of goods sold, and then you end up with your ending inventory. The arithmetic format would traditionally look like this. We're still performing the same calculation, but the image on the right may seem a little bit more familiar. Inventory items are assets, whether if they're raw materials like polyurethane foam or a finished product like a refrigerator, ready to be shipped to a customer. A typical journal entry will show the transaction date, account affected, in this case, the inventory account, and the debit amount added to the account. Below it and indented is the contra account, in this case either cash or accounts payable. But larger purchases such as these are typically made on account, using the accounts payable account. Now in this slide, my video is covering up the 500,000, but it is there for anyone who's interested. It is definitely a $500,000 credit showing in that block. So when the $350,000 inventory shortfall is realized, a journal entry is made to the inventory expense account as a debit, and the same amount is then credited to the inventory account, which is its contra account, in order for us to recognize the loss. A T account representation will show the $350,000 inventory expense, which is a cost of goods sold. It's being subtracted from the beginning inventory amount of $500,000. Now, just so everybody knows, we don't know the true beginning inventory balance. For this exercise, I supposed a $500,000 purchase of foam and then devalued the ending inventory by the shortfall amount, or the $350,000 shortfall that was realized. So now what? Going forward will require honesty. It's important to truthfully disclose the reality of a situation. It's also important to make sure to have at least one possible solution to a problem when reporting a problem to senior management. It shows leadership, team camaraderie, and provides some control over the outcome. When Parsi Ominous meets with the Vice President of Operations, a document should be provided showing the differences between the forecast and the actuals. The original forecasts were based upon engineering estimates, but the shortfall was realized after accounting for inventory levels. A cursory glance at confounding variables shows that production line usage may not be agreeing with the engineering estimates. Interviewing the quality controller might shine some light on the accuracy of those estimates. If more foam is being used on the production line, we have to know why. Is it a quality issue from the supplier? Does the purchased foam fulfill the order? Is the receiving department properly accounting for partially filled orders, or are they just closing it out when only part of the shipment has arrived? Is the foam that's being used cure to the anticipated volume, or are additional applications needed to do the job? Does engineering need to revisit their foam estimates? Having these questions answered beforehand will show initiative and help provide an avenue for correcting the deficiency that does not include Parsi's dismissal. Thank you for your attention. Have a great night.